What's up, guys? How's it going? Welcome back to another weekly analysis vid. Last week we said that the market was breaking up in a very bullish manner, and we kind of got the follow through. We knew that the market had come a long way pretty fast, but as I said, we had IWM, the small caps, creating demand here, weekly demand off the lows. And that's typically a bullish signal. And then we had the DJT doing the same thing. Everything pretty much looks the same. We had a sell into a rip that made a new high that gave us demand at this area, and we know that that's a bullish sign, and the volume confirmed that up move. So we knew that this week would likely stay bullish. I gave a few scenarios, if you remember, for the open of the week and how that would play into how the week would play out. I believe I was showing you guys this chart, which is now incredibly messy. But I was telling you guys, so here's Monday right here. So I remember on this day I said, okay, if we open sideways, we have a zone right here that we are likely going to test and hold and make our way up as support. And you can see that's exactly what happened. I was buying all along this day, made some buys in here, and that's kind of how I played that. I was pretty positive that this would hold, and if it didn't, I'd take the loss and we'd probably move down to the next area of structure. I said if we gap down below this area that we could have that would be pretty bearish. And I said if we gapped up that I would be selling this. But the way it played out was actually very bullish. The fact that we opened sideways and came down into here, I was pretty sure that buyers were going to step in and hold this area because we'd closed the week over it, right? This was an important weekly area, and we closed the week over it, and buyers came in just like I thought. So now we're kind of at a point where we actually built up some consolidation. I'm going to move back off this chart. We built up some consolidation here, and we've broken on Friday this kind of consolidation range, right? We've had a solid closing high, pretty good volume, and they ran it up at the end of the day. And if I go back to this other chart real quick, I know it's really hard to see, but this orange level here is our next weekly level, 284.85. And we've closed the week above that again, the next weekly level. So the same thing is going to apply coming into next week. If we open sideways above this level, 284.85, keep it marked on your charts. You can see it's important. I guarantee you it's important. If we open over that, look for that level to hold. If we gap up on Monday, this is very key. We're at a really key place in the market. This next orange level is going to come in. Not doing this very well. 293.47. 293.47. Keep it marked. Keep it on your charts. It's also right next to our 61% fib retrace, and I believe this is going to be a really key area for the market. 293.47. This is also around an area where we had some gaps. The market usually gaps to get over or under important levels. So we have gaps that need to be filled. Maybe we spike a bit higher. Maybe we fall right here. How do we know, coming into next week if things are changing down to the bear side again? Well, if this is failing, the first place you're going to want to look is Friday's low, because this is, it's a little bit messy, but it's a bit of a breakup of this range. So that's going to be our breakup candle low. And if you think about it, the breakup actually happens from the close on Thursday, because after hours we broke up here and then we closed up here. So imagine there's a whole green candle here. So the second area would be this gap. If the market's getting below this gap, certainly a daily close is not a good sign. that's probably an indication that we're going to come down. And we're going to come test this breakout area here, which hasn't really been tested. So if we're getting below that gap at all, it's not a very good sign because we don't have any other unfilled gaps below. So the market is automatically going to be attracted to the nearest breakout area, which is right here. So that's the bear side of it. If we gap up, I am going to be looking for a top. And, I can't tell you where exactly it's going to be, but I'm going to switch over to the ES here and show you kind of why I'm looking at this area. So first of all, this big red zone here, it's taken from a weekly chart. And the reason is because there's built up supply on a weekly chart. We have a drop here, and this is where the most shorts have accumulated positions, was during this week. The market comes up, people short, and now they've profited off the drop, right? And so there's going to be shorts that return within the body of this candle, within the wick or the body of this candle. So that's why I have this big red zone. And then at the bottom end of that red zone, I have a few levels here. If you can read over here, I have them all marked. So there's a weekly breakdown candle high. That will be right here. That's where we really broke down from this base, and we started the acceleration to the downside. So that's going to be a really important area. And just below those, we have a monthly open, March open, and a weekly low that was made right here. Right? This was the start of the week, and we made a low. So there's the low, the open of this candle. So that's really a pivot where we came down and the market thought it was important. And then we have the breakdown high from that area. And then just like I was just talking about on SPY, we actually have this gap here that really started to break down. So on any big squeeze up, we're looking here at this gap, and then we have the month of February close, which is slightly above that. So these are some key areas where I'm looking for a potential top next week. We can see we're kind of in a wedgish pattern here, and that, again, I say never place too much importance in your trend lines. They're there to help you and guide you, and they can be very helpful in making plays, but they don't always work, right? Sometimes it proves to not be important anymore, and you have to move it around. And so that's why I think price is always the thing you should focus on first. Focus on price, focus on where the buyers and sellers currently are and who's in control. And right now, the bulls are in control. Okay, so we have to understand that. Hopefully, whoever disliked my video last week did all right this week, but you gotta just stick to the trend, and you gotta play what's given to you, no matter what the news or the economics are saying. You have to focus on price because you're a trader, right? You're a trader. So we focus on what's happening on the chart, and we don't really give a shit, right, about the news. We don't care. You tell me something that's going to fundamentally change a company in the next year, and that news is released that day. Give me something that's going to bring liquidity to that stock and let me trade it well. Then that's great. I don't care what the news is saying about numbers of something, right? I don't care. The market's already forecasted that stuff is going to happen. The market's forward looking. So that's enough of that rant, but yeah, watch this key zone, guys. It's about 2,900 up to about 2,930, right? There's our 61% retrace. I know there's a ton of levels in here, but maybe that'll make it a little easier. It's a messy chart, but it's a busy time. So that's going to be our key area early next week. If we're up there soon, look for heavy resistance. And you know, what if we just kind of dick around in here and go sideways some more, well, then we can maybe push up to these higher levels. You know, there's no way to tell which one's going to happen. Maybe we kind of just go sideways back to the bottom of this wedge and we have another pop. That would be likely the scenario if we just went sideways for a few days or even a couple days. We'd likely pop and try to fill this gap up here at 29.60. Okay. But be prepared for a top, guys. Be prepared for a top. There's likely one coming very soon. Something really interesting I saw on the Qs, and again, it's just a trend line, but you know, we have a trend line with a solid amount of touches here, right? 4 or 5 touches, break below and closes just below, so it's still respecting it here, holding below that trend line on the closes, and again, it's respected. It closes exactly on the trend line, right? I mean, I can't make this up. Touch, 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 and it closes perfectly on the trend line, right? So you know these things can be very important, especially on the longer time frames. They tend to act very important. So it's interesting, you know, Qs were really strong this week. I know I said last week don't go long the Qs, which was a mistake, but early in the week we kind of identified that the Qs were looking stronger than anything else, and so we actually played a lot of tech. You know, sometimes you got to switch on the fly, right? One day the Qs are looking weak and they're not leading the market, and as the market breaks out, you see they're actually acting strong again. So you take what the market gives you and you get long the Qs. So that was nice, but we're going to be really cautious, right? We're coming into these supply areas, right? Here's this candle where all the shorts had built up positions. You're likely going to roll over up here somewhere. We have that trend line as well. So another thing I'm watching for is the Qs to become weak and potentially start rolling over. Maybe they stay up here a little bit. It doesn't have to happen immediately. It doesn't have to happen fast. A lot of people are calling for this really fast sell-off again, right? We're going straight back to the lows. We're making new lows. I'm gonna tell you something. It's probably not gonna be like that. You know, maybe it is. Nobody knows, but the chances that it's like that is really not very likely. I mean, if you look at the SPY and just look at this daily chart, and all you have to do is kind of just look at the structure that's on the way up. And so you have 2 pretty key areas of structure here and here. And so at the very least, you'd probably expect bounces on retests of both of those areas. And so that's already going to, and again, this is probable. It doesn't have to happen like this, but that's just how I see it happening. Typically, you get a fast sell-off, you get a rally, and you kind of wean your way down, right? You make kind of a staircase pattern or something similar to that. And so that's kind of what I'd be looking for. And again, we have this weekly demand down here that actually broke back above our 2009 trend line. So for now, that is the lowest I see us going for now. If this selling changes things, and there's a possibility we get a bounce here and maybe top again, if I'm seeing somewhere else we can top, then maybe that will change. It's definitely possible that happens. I don't know the future. I kind of just read price as it comes, and we don't have that sell yet to really gauge if it's going to be a strong sell or if maybe it's just a sell down to here and we make another wave up to the top and then maybe we have another sell there, or maybe we go to all-time highs. No one knows. And the news isn't going to tell you what's going to happen, so don't think that. But yeah, this is really the key area, those 2 areas of structure. On the downside, for when we do get a top and come back down here, it's going to be a really important area. We should see a bounce out of there, and from there, you know, we'll read what's going to happen. But that's what I'm looking for right now. And again, just look, right? We have a weekly high, weekly low, weekly low. It's an incredibly important area right here that we're in, and we shouldn't be surprised by a pullback within the next probably week and a half, I would guess, sooner than later. Okay, so the one interesting thing to me as I say, I'm looking for a top. You know, the IWM is looking pretty strong, right? They had a chance here to kind of bring it down, and it was looking weak early in the week, and they could have really had a bad close. But instead, we tested this breakout area, and we know that markets like to come back and test those areas, and then usually 90% of the time they're going to bounce, and that's what happened. And as long as the IWM really is staying within this range, right? So we had a 3-day range here. It broke down. Now we're back in the range. So as long as the IWM is holding this range, it's going higher. So I say I'm looking for a top, but then you have a market leader like IWM looking like it can actually go higher here. And there's two pretty key areas here. Well, first of all, you have this low, which we have not been able to get over yet. So that's our first key area. And then above that you have 130, and then you have 134. And again, you want to look for where did breakdowns happen. You can see the IWM is lagging, right, severely. And typically what that's going to tell you on a longer term basis is that there's more downside to come. And that's another reason I am looking for a top, and I'm looking for it pretty damn soon. The IWM, right, the SPY is up here. It's up here. The Qs are up here relative on the chart, right? The Qs are all the way up at this pivot, right? So you have the IWM lagging incredibly to the downside, right? Not making back its gains at all. So while the short term here looks like it can actually go a bit higher into this zone or this zone, you have a market that's signaling there's more downside coming. And so we need to be aware of that. We need to be ready for that. And you can see there's a trend line here that we're actually coming back to retest as well. Again, don't place too much importance in trend lines. This one only has 2 pivots. Thought it was interesting though. The trend line is going to be right there, and it's possible that we break down again, see the same sort of bounce, and maybe head up, or if the selling's really strong, maybe we just bounce a bit to here and continue down. Right? It's too early to tell. Anyone that says they know or they think they know is just lying to you. There's no way to tell right now how far down we will go. So yeah, that's the IWM. Huge long-term indication that the market is weak. Okay. And the other leading indicator that we like to look at, the transports. Obviously, this is another sector that hasn't been doing well. It's made back maybe a little bit more than the IWM, but still severely lagging. But again, we have a market. I want to see if I can draw something real quick. So that's interesting. I'm just kind of seeing this. We have 3 touches on both 4, right? 1, I guess 5. 1, 2, 3, 4, 5, 6, 7, 8. I mean, if you want to count every day, there's 9 touches on this trend line. So that's pretty interesting. And then you have 3 on the bottom. Okay, so this is going to be one to watch for me. You know, now that I notice this, it's a really clean pattern here. And if this can break up, you know, I really want to be watching this. That's really interesting to me. It's really clean. It has a lot of touches. It looks really well respected. So I was thinking kind of the same thing here on the DJT, that we could see upside. We could see a little more upside, and this is kind of my zone here that would be very, very strong resistance. Why? Because this is where we broke down. You got supply here, sellers coming in on this day, and then you get really accelerated selling to the downside. So that's our area on the DJT to be watching, the upper 8,000s there. And again, be watching these trend lines, guys, because if this breaks down, this usually is going to break down before any of the other markets. The DJT can often be a huge leader, so you really want to watch this early next week. is this breaking and closing daily? Make sure it closes daily above this trend line, or is it breaking down and closing daily below? That could be a very huge tell for next week, and I'll be watching this one. The SMH, your semiconductors, gonna look pretty similar to tech. It's been on a roll. It's up pretty much at these pivot highs, and it's where you can expect resistance. I don't see any reason why they can't keep squeezing a little bit higher up to these highs, or maybe even up to this gap. I don't see why they couldn't. We've basically had consolidation here for a few days. You had rejection, sideways, 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 little break, kind of a false break, but then you break again, and now we're up here. So why can't we keep going for a couple days? There's no reason we can't. There's really no reason we can't. It's failing if it's getting back below that breakout area, right around here, right around 128. Then it's failing. Then you got to reevaluate. But we're bullish until we get that sign from the DJT or the IWM that we're not going to be bullish anymore. We should just remain bullish, because you don't know. It can just keep going. You don't know. You don't know when the trend's going to stop. So don't try to short the market. Just wait, right? Wait until you get that sign from a market leader that tells you it's time to get short. Okay. And the XLF. The XLF, the financials, it's another big tell that they're lagging the market severely. It's a huge tell, because the market can't go anywhere without financials doing well. So we had some zones here that were long-term zones. We said we were looking for bounces at. We did get the bounce at the first one. And, we've closed here. We've closed here 2 weeks above this low again. So they're not necessarily weak right now in terms of their position on the chart relative to this low. Right, they're back above, and so that's a solid sign. They're back above this low. But again, you have a market that's severely lagging, and you want to watch for this breakdown right here. You want to watch for that. And that doesn't mean that we're going to just die again, right? It doesn't mean we're going to die. It can go down here and get bought up, come up here, maybe even back tested a few times. It can be a lot slower. You don't know. And so play it by ear. Look for a break in multiple sectors that are confirming that our market is going to see a reversal before you just jump in. Because right now, we're going up. We don't have any sort of sell. We don't have any sort of trend break. So why can't we continue higher? We can. So keep that in mind when you're looking at this. Watch for any weekly close back below this low. I think that's going to be important, because they've been holding it up for 2 weeks now, and if we close a week back below that, that's going to be, it's not going to be good, and it's probably going to be a break of our trend too. So again, we have another sector that's kind of teetering, and we have to be watching this for that breakdown. Okay, if it comes, right? We're aware. We have less risk on the long side. We are aware that a turn can come soon, and we risk our positions on the long side accordingly, and we're ready to pounce right when we get that signal. You got to be non-biased in the market. Got to be non-biased. So that's going to be it, really. I don't think I have anything else for you. I might try to get some trading ideas up on in a video later this weekend if I have time. I don't know. We'll see. I might have time. I might have time tomorrow morning to throw one up. So I'll try and do that. I'll try and get some setups tonight and and get that for you guys. But hope this helped, and like and sub and all that jazz. Have a good one, guys. See ya.